Hello and welcome to my YouTube channel. Today we're going to be focusing on Nasdaq market breakdown. Stay tuned. Okay, let's get started. Hello, guys and girls. Welcome to Blueview FX. So today we're going to have a market breakdown. We are looking at Nasdaq. This is our first video on YouTube, and it has a lot of educational content. So hang tight. Okay. So now we're gonna start by looking at Nasdaq from where it is now. You can see that Nasdaq has reached an all-time high right here before it started reversing to the downside. So overall, we are looking at this structure. We can see that Nasdaq has been trending up. So we're gonna be using technical analysis to forecast the next move of Nasdaq. Is it gonna continue to go down, or is it gonna shoot to the upside? Okay, so we're gonna start by placing our trend line to identify the kind of patterns Nasdaq is giving to us. So for you to draw a trend line, you need a minimum of two swing points. When I talk about swing points, Bazalwane, I'm talking about these things. Here, you can see the market is swinged here, and then it has also swinged here. So this trend line, it is valid since it has two swing points. So I'm just gonna another swing point, and then you take it to another swing point. It's simple to draw a trend line. You just connect at least two swing points. All right. Okay. So now, as we're looking at Nasdaq on the daily time frame, we can see that Nasdaq has indeed been trending up. But another thing, now that we have placed trend lines, we can see that Nasdaq has been trending up inside a channel. This channel, we can identify it by this trend line. It's called the ascending channel. Okay, so since we are looking at Nasdaq and we are breaking down Nasdaq, we need to look at the current price action right here. If we are to take trades, our trades are going to come from here, current price action. So we're going to be doing a top to down analysis on Nasdaq. So right now we are on the daily time frame. All right, so now we're going to move to the 4-hour time frame. Since we have just identified how the structure of Nasdaq, you can see that it's inside an ascending channel. So now moving on to the daily time, to the 4-hourly time frame. Okay, so this is the all-time high that Nasdaq has created. So since it created this all-time high, when it touched this price, you can see that Nasdaq now started ranging. It was a ranging market. This was either Nasdaq was going to continue to go down, to go up, or start to go down. And then evidently, as we can see right here, that Nasdaq actually chose to go to the downside. But it did not just rally to the downside. The market always gives confirmation. So after Nasdaq broke above this now resistance, uh, when it started ranging, you can see from here, it started ranging, it broke down again. And as it broke down, it went back to retest the very same zone that it broke, and then it started going to the downside. Okay, so here we can see like an impulse moving out of that ranging market, and then we see a tight correction here, and then we see an impulse to the downside, another correction, and then an impulse to the downside. Okay, so before we go any further, I want to emphasize that when you're a trader, you must know that the market moves in this way. The market does not just move when it feels like, or it doesn't just go on a straight line. This is how the market moves. It will create an impulse down or an impulse up. But right now, I'm going to show you an impulse down. Okay, let's say it creates an impulse down. That is the first commitment to a direction. So if it gives us an impulse down, we are always expecting a correction to the upside. Some may call it a pullback, and then we're gonna get another impulse and then another correction to the upside and then an impulse. So this is how the market moves. This is how we are able to even identify our 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 patterns like this. If you can just put your trend lines, you're gonna see that okay, when it does this, it actually creates something of which here you can see that it's a descending channel. You understand? So right now we're gonna go back and look at how the market is right now. As now you know that the market moves in an impulse correction. All right. So as we are in the 4 hour, I just wanted us to see the structure more clearly so that for your understanding. Okay. We're gonna come back now. We're gonna go back to the 1 hour. This is a multi-time frame analysis. You must remember to start looking. The reason why we do a multi-time frame analysis is to look or see the bigger picture of what the market is actually doing. Uh, right now, we can see on the 1 hour that ever since it left this ranging market, tested the broken support, which is now resistance, and then it went down, correction, and then down. You understand? That's how the market moves. So right now, this is the current price action. Right here, we are looking at it. This is what is going to give us an idea as to what is going to happen next in the Nasdaq market. So for us to actually know what is gonna happen next, we're gonna need to break it down and analyze. And then right now, we can just go back to placing our trend lines. If you see a trend, place a trend line so that you can see that okay, now this market is trending where it's trending down. If the trend line gets broken, now you get an idea that okay, the market has actually changed direction. I'm going to show you an example by just right here. This market was trending down, but we see a change in direction the minute the market breaks our trend line. Now, if it breaks a downtrend, it starts an uptrend. Okay, so I'm just going to continue on putting some trend lines here. As we can see, as I've taught you, for you to draw a trend line, you need a minimum of 2 swing points. And as you can see right here, on this trend line, there's a touch there, there's a swing point, there's another swing point, another touch, there is another touch on that trend line. And this is only a descending channel. So when we talk about such things like descending channels and everything else, uh, they have a meaning behind them. For example, this descending channel, it was telling us that the market has been trending up. And if you can check, the market respects the trend line. If it touches the trend line here, it won't make a mistake here. Like, it's not a coincidence that the market touches these trend lines at the places where it's supposed to touch. It's not a coincidence. The market respects trend lines. So, trend line is another good tool for you to check your trends and then to check change in trends. For example, right here. So this is the current market price and we are looking at it from the 1 hour chart. Okay. So I'm going to identify market structure. This is the high of Nasdaq, and then this is another, and then this is a low. So our trades are in between these two lines. It's either Nasdaq pushes to the upside or Nasdaq continues to the downside. Okay, so right now I'm gonna just highlight a few important things that I am seeing in the market right now as we are breaking down. Okay, so since Nasdaq has just broken out of a descending channel, it broke out how? It broke out impulsively. So, as I've taught you, the market moves in this way: impulsive, correction, and then another impulse. Okay, so this is evident to us that the market has broken out of this trend, downtrend, this descending channel, and then it went up, and now it's going back down in a corrective manner. So, that gives us an explanation that this is actually a correction. As you can see how the market has been moving, there's a difference between how it moved to the upside and how it's going to the downside. So since the market has moved out of this descending channel, and then it moved out impulsively, and then it's giving us a correction. Doesn't matter how long it is, but it is a correction by the way it is moving. So another another reason why the market has actually broken out of this descending channel is one. Uh, as you can see right here, the market has touched this trend line one, two, let's not forget, three times. So whenever the market touches a zone or a trend line multiple of times, that place has high probability of doing what it says it will do. For example, this is a triple touch. So if you touch three times on a zone, it's a triple top or a triple bottom. That's a sign of reversal. So if the market is touched three times on this descending channel, that is another sign of reversal. That's why when this happened, we did not wonder or we were not surprised because we knew that it will actually happen. So it happened, the market broke out, and it's giving us a correction. So that means now we are looking for moves to the upside. Why? Because as I've taught you, the market moves in one way. Since I've told you that this is a reversal and I've shown you by the touches of this trend line that this is a reversal, it actually reversed impulsively and broke out of that descending channel. And now it is giving us a what? A correction. So that means we should expect a move to the down upside. You understand? Now Nasdaq must move to the upside as per structure. So that is only our forecast and our expectation using the market structure. So now the question is, how do we know when to buy and if it's safe to do so? It's simple. Every time the market breaks out or gives us an impulsive move, whenever it gives us a correction or a pullback, after that pullback, we expect another impulse. So we're gonna place our trend line right on this pullback right here, as you can see. Ah, as you can see. And then to my surprise, we are getting another channel, a descending channel. So this descending channel, this correction has actually formed a descending channel. As you already know, a descending channel takes the market way up. If it breaks this the descending channel, it's going up. So that's when you know when to buy. That means on this trend line, this correction is trending to the downside. So you just place your trend line, and if this trend line is broken, just like right here, you take it for buys. You take it for buys, just like right there. That is how the market is performing. Ladies and gentlemen, as I've stated, the market has just created an impulse and now it's coming back with the correction. So since it has done that, it has created this impulse. Now it's coming back with this correction. That means now we must expect the impulse to the upside. Okay, so this area right here is our first take profit. That means if you buy Nasdaq from where it is right now, as it's breaking this descending channel, if you buy Nasdaq, the first place where we are expecting to close our trades or take our profit is this place, because this is the previous high where Nasdaq is actually reversed. So if it's gonna reverse from here, it's gonna actually come back here. So looking at how Nasdaq is actually broken out of this big descending channel, uh, it indicates to me that it broke impulsively. Whenever the market reverses impulsively from whatever, whether it's a pattern or it's just created a double bottom and then it breaks out of that pattern impulsively, now we expect the market to activate the 90% rule. That means as it's reversing from here, we expect it to move 90% back up to where it started from. So it is evident that Nasdaq has actually broken out here impulsively, gave us a very nice correction. So the next impulse, we may expect it to actually reach up to here. Okay, so after the break of this correction, we're going to be taking our buys, and then our take profit is going to be there. Okay, all right, I'm going to just so since we're taking our buys here, our first take profit is here. But since the 90% rule can be activated, As we take our profit now, how do we go back on the trades? Okay, the Nasdaq, if the market is gonna continue and respect the 90% rule, it's gonna break this zone where we had our first take profit right here, and then it's actually gonna create another correction, and then it's gonna go back and finish the market move. So as you can see right here, this is an impulse correction, impulse correction, impulse. That's how the market moves. As long as you have gotten the bigger picture, now you know, you even predict, or you can see how the market will move going forward. So, ladies and gentlemen, this was our analysis. This was our Nasdaq breakdown. This is our first ever YouTube video. If you have enjoyed it, please click on the like button, subscribe for more content, because we're going to be bringing more content. Thank you very much. This is Blue View, Money at Work. Guys and girls, as you can see, we did take the trade, and this is our entry. This is where we took the buys of Nasdaq, and you can see we took this on a real account. And then here you can see that the market respected our setup. So one thing I want to emphasize is that we are traders. We don't predict. We find repeatable patterns in the market that lead to favorable results over a large sample size. That means we have no idea if a single trade will be profitable or not, nor should it matter. We react to what happens and execute. Execution is the last step.